What's up, traders? In this video, I'm going to talk about my top 10 rules for high leverage trading. Think of this as the psychological rules that you're going to need to become a better, more consistent, more profitable high leverage trader, right? We can all get lucky on a swing. We can all get lucky on a couple of trades and do well, but we need discipline to survive in this game, right? And survival of the cautious, kind of what I subtitled this. It should have been survival of the disciplined. And these rules are going to allow you to be a more disciplined, more profitable trader. And I'm going to put a link to this PDF. You can take notes. I encourage you to take notes. What I'm going to do is I'm going to cover these rules and overall, and then I'm going to go in and talk about each one of them and probably pull up some charts and talk about how to do some things and when to do some things. Yeah, I also encourage you to use these as a check-in, right? Like at the end of every week or when you're filling some positions, right? Use this as a check-in. Am I using the right leverage, right? Is my account size too big compared to my other account? Am I chasing? Am I trailing my stop? Am I paying myself, right? So use these as a check-in on a weekly basis, and that'll help guide you back. That'll help ground you as a trader. That way you're still within your discipline, right? Because our role as a trader is to extract value from the market. It's not for clout. You might think that some of these Twitter big name traders, the ones clouding too much, you think that's the best way to be a trader, and it's really not. Your role, you have one specific role in the market, and it's to extract value. And these rules, these 10 rules are here to help you do just that in a disciplined fashion, week over week. And let's dive in. All right, I'm going to go ahead and cover the 10 rules, and I'm going to talk about each one individually. So rule number 1 is leverage account size, right? Leverage account size is how big is my leverage account compared to my spot account, compared to my cold storage, compared to my other holdings in crypto, right? Am I leveraging too much in respect to my overall portfolio? Rule number 2 is understanding your leverage and your risk, right? Are you using enough leverage? Are you using too much leverage? Are you using too little leverage? Do you understand leverage? And I'll talk about that. Rule number 3 is never chase. Rule number 4 is trailing your stops. We're going to talk about partial stops and how important they are to keep you in the trade and to keep you getting paid. Rule number 5 is always pay yourself, right? Pay yourself daily if you can. Rule number 6, have an exit plan. When you have an exit plan for how you're paying yourself, you're going to pay yourself more and you're going to see yourself more rewarded by your actions. Rule number 7 is hedge your sub accounts, right? Nothing goes up forever. So you got to learn when to hedge and how to do it on sub accounts. And if your margin exchange doesn't offer sub accounts, you need to migrate to one that does. Rule number 8 is having reserve funds. Rule number 9 is time frame, right? What time frame are we analyzing on? What time frame are we executing on? Are we doing it all on one time frame? How often are we getting stopped out, right? These are things you want to consider. And rule number 10 is your position size compared to your sub account or your position count, right? Are you having too many open positions per one sub account? How are we mitigating that risk, right? So these are going to be my top 10 rules. Now let's dive into them. Let's dissect them. Let's talk about them. If you guys have questions about this, drop them in the comment box. And if you want to talk more about this directly with me and with the trading community, click the link in Discord and hop in our Discord and we can talk about this. All right. So, leverage account size. Personally, I don't want to leverage. I don't want to have more than 1 to 4% in a leverage account. Let's say I'm starting one today. I would not want to put more than 2% of my overall exposure to crypto in that leverage account. Why? Because I can leverage it at 100x, right? I'm not saying I'm going to utilize all that 100x worth of leverage. We'll talk about that a little bit later. But if I make a swing, if I make a 10% swing on 100x, right, that's 1,000%, right, on that 1%. That's fantastic. I can then pay myself and allow that margin account to grow, right? And I never want to, let's say I get stopped out or I get liquidated on a sub account. I never want to transfer more than 1% back into the sub account of my overall exposure. You want to be able to interact with this market more than once. If you're transferring 10%, you only get 10 tries, right, you only get 10 tries to re-long. But if you're transferring 1%, right, you get a lot more tries. And once you get in a good swing on a good dip and you let it rip, then you can really reap the benefits of having the right leverage. And let's talk about right leverage. Understanding your leverage, right? Some people think that 5x is less risky than 20x or 100x. Now, 5x is decent leverage, right? 20x is good leverage. But the psychology of it, let's keep the numbers simple, right? One can transfer $1,000 to leverage $5,000 worth of a token on 5x, right? You can transfer $1,000 to leverage 20 grand worth of that same token, or you can transfer that $1,000 to get 100x leverage, right? Personally, I believe that higher leverage is less risk. I'm risking less capital, right, to execute this trade, to take on this many contracts, right? So I prefer higher leverage, but there are rules. There's going to be specific rules to getting those high leverage entries that are going to be at a low risk, right? And which leads us into rule number 3 is not chasing, right? If a chart's going up, if your chart's going up and you're buying these up candles, you might be able to get away with it on 5x, right? And that's where understanding your leverage comes in. But you're not going to get away with it on 100x. There's not. My rule for everybody that's trading with me and how we tend to execute is we wait for the chart to come to us, right? We sit there and I use Fibonacci retracements and I will draw the 50% or the 61.8. And we say, hey, we're going to interact with this 61.8. We're going to wait for the chart to come to us. And this just happened. We had Algo USD did that today, right? I set the 61.8 level. I said, hey, we're going to wait for the chart to come here. We're going to wait the volume. We're going to wait for volume to come in and turn around, and then we're going to long it. And that's how we were able to interact with these assets with a tighter stop on 100x, and then letting the market do the work, right? We're in the market so our money makes money instead of us working hard for money. And yeah, by not chasing, you're mitigating your risk. You can use higher leverage, get a better discount, and sticking to the rules. Trading wicks, right? Getting nothing's more rewarding for me than getting 100x leverage, decent position size with a tight stop, and then on like a 5-minute chart, right? Which I've analyzed the chart. We'll talk about this in later rules, but getting a wick entry. You zoom out on the daily and you're like, dang, we caught that wick on 100x. That's amazing, right? The next rule is going to be trailing your stops. So let's say we get into that wick, right? And the chart starts going up and it goes up like 5%, 10%. By trailing your stop, I don't mean trailing your full stop. I mean trailing partial stops, right? The chart goes up and forms a swing. I'm going to pull up a chart. Let's pull up a chart and talk about it in real time, right? So let's do like the hourly on Ripple. Let's say, so the red line is a 61.8%, right? Let's say we get a fill here at like 100x and the chart goes up and then it pulls back, right? It goes up. And now we're entering this breakout. We clear this fib and we start moving up right now. So where's the best place to start trailing our stops, right? Do we want to trail our stop all the way? Well, let me move that just a little bit so you guys can see me and see the chart, or see the chart better. Forget about me, right? Let's say we get our entry here, right? Chart goes up and forms this wick low, right? And then we enter a swing. So let's say we see this happen. We say, okay, I'm going to put a partial stop loss of 1/4 of my position here, right? And then we see the chart revisit, right? No breakthrough. We're not stopped. We're still fully in this position, right? And then we see this higher low form, and now we see the chart starting to break out. So at this point, right, we can trail another quarter stop to here, right? This does not want to draw well. So every time I put an arrow is going to be a quarter stop, right? So this is a quarter stop, right? And then we enter a new swing. The chart breaks out, right? At resistance, previous resistance, and pulls back here. Let's do another quarter stop, right? So now we have 3 quarter stops, once again, we see a trend continuation, then we have another low, then we can actually move this stop, right, and set it over here. And we see a continuation and a pullback, and let's say we see this pullback, we're like, hey, like I'm really happy with these profits. I'm going to move this quarter stop up here and this quarter stop up here, right? That way, if this starts dumping, at least I take profit on half this chart. And then we see this get stopped out, right? And then we see a secondary swing. So we're going to move, this is going to scare us a little. So we move this quarter stop over here. And we have another quarter stop here. And then we see this head and shoulders. The chart starts breaking down. But what we did, when it did start breaking down, we took profit on half this position, right, that we got in over here. And now our average is way lower, right? Because we bought low, we sold high, so we kind of average down to here. And let's say we have our stop at original entry. And yeah, now we can trade the swing, right? And we can figure out if you want to short this on a sub account. I'm not going to get ahead of myself, but what I mean by trail your stop is hiding our stops, partial stops, right, under wick close, right? So finding these wick close and these swing lows before upwards continuations is really important to position manage and trail your stops. That way you stay profitable in case the chart pulls back, right? So doing something like this, then you see the pullback, maybe you got stopped out 3 times, we still have a quarter of that position in, and we have a lot of profits. All right, where we? All right, trail your stops. And then we have always pay yourself, right? So on exchanges like FTX or Deribit, you can withdraw your UPNL, right? So we enter the swing and the chart starts going up, right? We have unrealized profit. So as we're trailing our stops, what we can go ahead and do is start withdrawing profits to a different wallet, right? What that's going to allow us to do is maintain our capital, maintain the position size, right? We can maintain as many contracts as we already had. Meanwhile, we're trailing our stop and we're withdrawing profits, withdrawing UPNL, unrealized profits, into a wallet where now we're actually realizing these profits, right? You didn't close out the trade. You still have the same exposure. You're trailing the stop in case the chart dumps, but you're at least paying yourself. And one thing I recommend doing is paying yourself as often as possible, right? Let's say we're in like 3 profitable trades and we're on 100x and let's say, keeping the math simple, you know, the account had $1,000, now it's up to 7,000. Pay yourself. Take $4,000 out, right? Take $5,000 out. Get that account back to that manageable size you're comfortable managing, whether it's $1,000 or $20,000 or $30,000 or $50,000, right? Or even $100 or $500. But always pay yourself and do it as often as possible, right? Your UPNL can be withdrawn. So send it to a different exchange, send it to cold storage. And if you can't pay yourself daily, pay yourself daily. Like I had this week where I paid myself 3 times a day, right? This was like the week when the markets were swinging up, I was paying myself 3 times a day for like 2 days in a row. And it was amazing. And yeah, and if you can't, right, do it daily, do it weekly, or as often as possible. Which ties into number 6, have an exit plan, right? So you paid yourself. Let's say we started with $1,000, we're up to $7,000. We pay ourselves $5,000. What are we gonna do with that $5,000, right? Do you have bills you need to pay, right? Do you have credit cards you need to pay off? Are you comfortable enough where you can grow your long-term holdings with your earnings, right? Let's say you earned $5,000. And you believe that, let's say, Ripple is king. You think Ripple is the long-term trade and you want more Ripple, you know, diversify. Take those $5,000 and put them in these other tokens. Like I've been adding a lot of Raven to my holdings because I really believe in Raven. And every time I pay myself, I take some of that payout and I buy more Raven with it. And that's one of my exit plans. Another thing I do with my payouts is I put some in my reserve fund, right? And we'll talk about that. That's number 8. Next up, after your exit plan, you know, you want to have your sub accounts, right? You want to be able to hedge your sub account. Let's say we get into this trade and it's going up and it's looking amazing. Well, hopefully by this time we've trailed partial stops and we've paid ourselves once or twice. And now it's time to hedge a sub account. So after you pay yourself from that run, right? You want to pay yourself from every big run up you have, even if it's 20% of that run up, right? What you want to do is you want to transfer enough row or enough UPNL to a sub account to execute a hedge. So you can keep your long open. Let's say we long Ripple, and now we think the chart is stoppy. We want to short it, right? So we can open the same amount of contracts on a short, so we can hedge the long on a different sub account and capitalize on the downside, because nothing goes up forever. Markets are volatile. Crypto is volatile. You want to be able to capitalize on the long side and on the short side, right? But make sure you pay yourself before you hedge, or else you did all this work in the market for a week or 2 weeks and for this long swing, and then you get nothing, right? So pay yourself, reduce position size, chill your stops, and hedge. And let's say the chart does dump. Then you can move some of that UPNL somewhere else, trail your stops, right? Pay yourself, and add long in another sub account or on your main sub account. Which one? The one that you had your longs on. All right. Next up, we want to, number 8, we want to have a reserve fund, right? A reserve fund, preferably put it on cold storage. Get you a Ledger Nano, a Trezor, and with your reserve fund, what that does is it makes you more of a disciplined trader, right? If you just keep moving your UPNL into sub accounts, you can click buy, you can click sell right away. And that's going to work against you, right? The market starts dumping and you think it's done dumping, and your reserve funds are accessible where you can just keep clicking right away and keep retrying. That's going to work to your detriment, right? You want to be able to have that downtime between when you think you're ready to execute and when you are ready to execute, right? And having a reserve fund in like XRP, maybe there's like a 1 minute transfer time. Link like 5 minutes, LTC 5 minutes. So I like having my reserve funds in fast to transfer assets. And if I get stopped out and I want to add more funds to a sub account, right? And just log into my ledger, withdraw whatever I want, send it there, and I'm able to execute. And what's nice about having this downtime, let's say I did have a fib and I am waiting for the chart to get there. And sometimes it gets there and we get that volume and it turns around and we're able to long it on the way back up. It's still a nice entry, right? And it's great. But sometimes during the transfer time, the chart keeps dumping. And it's like a safety net. And it gives me, it might make you anxious a little bit, but it will add discipline to your trading. I promise. It'll make you think about the next time you get yourself in that situation too. Back to, and then, so number 9, it's about time frames, analysis versus execution. You guys that follow me, right, you know that I'm mostly analyzing charts on a daily, right? But you guys that trade with me, you know that I trade the 5 minute, right? So we're sitting here and we look at the swing, we look at something like XRP, right? And we see this swing up, right, from swing low to swing high, and now we're seeing this pullback. Like, where do I want to interact with it? Oh, I want to interact with this 50% retracement level, right? So we saw that on the daily. Now we go in on the 5 minute, and we're looking for the inconsistencies. Has it really hit this fib level? It hasn't. It has not, right? Now, the things we see on a 5 minute volume bar versus the things we see on a 15 or a 30 or a daily are completely different. What trading on these smaller time frames allows us to do, I'm just going to go back to the example from today, up here, right? So I did have a 61.8 on today, and we look at something like this, right, where it did wick below on the hourly, right, on the daily, but yeah. So point is to say, pay attention to the small time frames, where you're seeing support, where you're seeing resistance, and make sure you pinpoint where you want to interact with your chart on a higher time frame, right, on a longer time frame, and then tune in and execute on the small time frames. Like 1.435 was our long signal, and just so you guys don't think I'm bullshitting, this was today. I said looking at counter trade 1.435 via Algo FTX, right, and that was that red line that I'm highlighting, right? And it wicked below, but I did get along right at 1.435, and now we're riding up. then the final rule, position count and sub accounts, right? The market's dumping and we're like, hey, we're going to buy the dip. We're going to go dip shopping. So we go dip shopping and we buy, let's say, Algo, and we buy Link. And do you want to keep buying? Do you want to like really overexpose that sub account on high leverage to all these positions? Sometimes it works out, but a lot of times it doesn't. So one thing I figured out is let's stick to 2 positions, right? Let's say I long Luna and I long Algo and I wait, right? And I wait a couple of hours. Let's see how the market really reacts. Did these 2 charts bottom? And if these 2 charts that I have confidence bottomed and they start going up and they clear the next 61.8 bearish retracement, then I can start thinking, okay, well, I did want to get a long on Link or Litecoin or Ether. And now I'm going to start looking for those entries on the other charts. But we don't want to get to a point where our portfolio is leveraged, a sub account is leveraged more than 25%, even if you're on 100x leverage, because you don't want to get liquidated. You don't want one chart to dump and completely destroy that sub account. We're having to start over from zero, right? You're having to go back in a reserve fund and transfer them back. Anyways, these are going to be my 10 rules. I really think that using them as a weekly check-in or a daily check-in or a weekly, monthly check-in, or every time you want to execute a trade, right? Just to help guide yourself. Some people say, oh, do a trading journal. I think having something like this is going to be a lot more productive than a trading journal, like a check-in, right? So hopefully this helps you trade better on high leverage, and drop me some comments. Let me know what you think of my rules, and if you want to trade with us and kind of work on your psychology, work on better reading charts, work on your Fibonacci extensions, retracement methods, and reap some rewards and extract value from the market, follow the links. You can check us out at Coin Observatory. You can join our Discord. You can check out my Medium writings, and yeah, we've got a lot. We put out a lot of content, and yeah, we'll see you in Discord. Thanks.